In Focus with Jeremy Szafron is brought to you by Swan, the real Bitcoin company.
Welcome back. I'm Jeremy Szafron. All right, Bitcoin is trying to find its footing after one of the sharpest reversals of the year. Now, earlier today, it slipped back into the high $80,000 range, but at the time of taping, it's recovered back above $93,000, and it's still nearly 25-30% below the October all-time high, but it has effectively erased some of the Bitcoin gain, obviously, for 2025. Now, ETF investors are underwater for the first time. Corporate treasuries, including strategy euro preferreds, now trading below par, really feeling the pressure. And at the same time, long-term holders and sovereigns, they're quietly accumulating into the weakness. Now, this is the biggest structural test of Bitcoin's institutional era since the ETF launch. So today we're focused on one question: is Bitcoin breaking down? Are we resetting for what comes next? Are we buying the dip? Of course, joining me now is Jack Mahler, CEO of Strike, a co-founder of 21 Capital. Jack, great to have you on in this moment.
Good to see you, buddy. Thanks for having me back.
Always. Okay, lots hitting right now. Obviously it's a volatile market, but we've seen this thing go from 89,000 to 93, just as you and I have been chatting. We let's talk about the moment that we're in. We saw that fall, it snapped back. In your view, what is this moment? Is it a healthy reset after October's euphoria? Is it the start of something deeper?
I think broader markets in risk are selling off, generally speaking. Bitcoin tends to lead that because Bitcoin tends to be one of the only accurate smoke alarms for fiat liquidity we have left in the world. And I hold the thesis that that's because Bitcoin's the only truly free market that we have left in the world. But what I think markets are going through right now is really trying to digest what has become a complicated liquidity situation. So, I actually, as preparing for this show, I pulled up my US liquidity index. The US liquidity index that I look at is down 10%, a little over now, over the last 6 months. So I think the story is this Trump administration came in, they campaigned on lots of liquidity, reindustrialization, lots of GDP growth. And that narrative was a little confusing with Elon Musk and Doge, and that Elon Musk was going to send us into austerity by running the US government like a lean startup. And then that didn't work. And then we had the trade wars and we had Liberation Day. And after Liberation Day, there was taco, Trump always chickens out, and the markets then front ran liquidity. You saw Bitcoin separate and front run what the markets assumed to be more liquidity coming, that there was going to be a truce with China, tariffs were going to be a little bit more mild than they were advertised to be, and that the US would find a way to work with the Federal Reserve and reindustrialize this country and print lots of money to make whole on the promises of the campaign. And I think that hasn't happened. Most specifically that I want to highlight is in September, the US government ran a $200 billion surplus. So that is an annualized surplus of over $2 trillion. And then in October, the government shut down. And so this has been one of the tighter liquidity periods for markets generally. I think the combination of AI, this administration, and the lack of liquidity follow through markets are just trying to wrestle with. And so Bitcoin is correcting back towards where it was before this administration got going, because it's unclear where the liquidity is going to come from and when it's going to come.
Yeah. When you say the narrative was confusing, confusing for who? Because was it kind of talking about that institutional positioning, maybe retail expectations, or the fact that Bitcoin was being treated like a tech stock one week and a safe haven the next? Because confusion usually means mispricing, and if the narrative wasn't clear, that does that mean that Bitcoin obviously got ahead of itself and that this pullback is just market correcting bad assumptions?
I think it's confusing. I meant on behalf of the administration, of the Trump administration. So the Trump administration came out, we're going to reindustrialize, we're going to print a lot of money and make America great again by bringing back, the way I think about the United States is China has disrupted red America and the internet has disrupted blue America. And they both kind of fight these enemies. And Trump came in and said, we're going to fight China by reindustrializing. And that implies a lot of money printing, a lot of stimulus. And that hasn't happened. And then there was a lot of confusion of, well, how are we going to achieve that if Elon Musk is going to send us into austerity with Doge? How are we going to achieve that if we can't agree to terms with China? And so there's been a little bit of confusion of what side are we playing on, put up or shut up? Are you going to print the money or not? And that's where the confusion has come from. At the end of the day, to me, Bitcoin is priced on future expectations of fiat liquidity, period. Bitcoin is the antithesis of fiat. Fiat has no supply cap. Bitcoin is finite. Fiat can be censored. Bitcoin can't. Fiat cannot be audited. Bitcoin can be audited by anybody. And so Bitcoin is the best expression of fiat. And so if there's tightening of fiat liquidity, then Bitcoin is going to be the smoke alarm that shows us that. And so I actually put out a post on X over the weekend where I said, gold making new highs this year shows us that governments and central banks have to print, but Bitcoin falling from highs right now shows us that they might have a liquidity crisis before they're forced to. And so I think the two assets play different roles, and that Bitcoin is a very accurate smoke alarm of where liquidity is today, rather than the gold market is sniffing out where this is inevitably going, right? We know QT is ending, QE is going to have to restart, rate cuts are coming, and there's all sorts of stimulus, whether it's Fannie Mae, Freddie Mac, a housing crisis to be declared in 2026. So I see this as a buy the dip opportunity. The way to monetize a currency failure is to not bet that the stock market's going to go down 50% like Michael Burry and have your fund shut down. The way you do it is by owning a better currency than the dollar, which would be something like gold and Bitcoin. So this is a buy the dip opportunity for me. I think liquidity has to come physically. There's no other option. And this is just a mere reaction to the lack of follow through from the administration.
Okay, that's interesting. I mean, if fiat's tightening this aggressively, shouldn't Bitcoin be benefiting as the alternative, monetary asset? Instead, we're seeing Bitcoin fall almost 1-to-1 with the tightening. How do you explain the disconnect?
Well, Bitcoin has been, and I'm not saying that this is how I value and view Bitcoin, but historically, Bitcoin has been some combination of a hard money alternative, a neutral reserve asset like gold, and technology. You can make the argument that Bitcoin's macro thesis or macro value is that it is technology plus fiat liquidity. And so it's been relatively correlated to the NASDAQ with the properties of gold. And so the market is still trying to figure it out. But the way, again, I would encourage everyone to pull up a US liquidity index chart and a Bitcoin chart, and they're relatively correlated, which is, I think, what we all want. We all want the best expression of fiat debasement, that we all want to own something that is the opposite of someone being able to print time and energy out of a central bank while I have to get up out of bed and work for the currency. And so I think the market is still maturing in its ability to price Bitcoin. Gold is definitely leading in where the world is going. And Bitcoin is acting more as a real-time index in how that progress is working towards the inevitable future, which is we're living through a sovereign debt crisis. I mean, at the end of the day, that's the problem, is that these sovereign nations are in way over their head. And gold is sniffing that out. We're going to have to reprice the world around us in a significantly weaker dollar. And Bitcoin is taking us along that journey. But in part of you're exposed to more volatility with Bitcoin. You're exposed to more of the extremes, but that's to both the downside and the upside. And so, to each their own, I prefer owning the best performer. And so these are buy the dip opportunities for me, and 25% off highs during a liquidity crunch where the government shut down and is reporting surpluses and $200 billion. It's no problem for me.
Yeah. You're not panicking. I know. I don't see any sweat there. I mean, everyone does want to know. I mean, I put out something on X this morning. Everyone wants to know the same thing. I mean, not the number, but the kind of the conditions. I mean, what has to happen for Bitcoin to bottom? Is it ETF inflows returning? Is it that macro stability? Is it forced sellers washed out? Or does spot demand need to kind of return? Or has it bottomed out here, right?
We could be. Listen, could Bitcoin go to 85, 80? Probably. But, I think there's two things. There's a really healthy cleanse of narratives within Bitcoin. I think that there was the narrative was ETF institutional demand. Well, a lot of the ETF flows are the basis trade, is, arbitraging futures with the ETF. And then there was the Bitcoin Treasury narrative, which we can talk about as I'm the CEO of 21. We're not a treasury company. We think we're substantially different than that. But there was this idea that institutions were gaining exposure to Bitcoin through these Bitcoin securities, and that there was an MNAV premium to that. And a lot of that's unwinding, which I think is very healthy. And so I think we'll find a bottom when the market realizes that Bitcoin doesn't trade in 4-year cycles, and that a lot of the institutional narrative was a little bit overblown. But right now people are freaking out. Like, oh my gosh, these institutions, they're unwinding from their ETF positions and they're unwinding from Strategy's MNAV trade, when in reality, I don't think it was ever really there at the size and scale that it was purported to be and that the narrative conveyed. And that Bitcoin doesn't operate on 4-year cycles like horoscopes, like it doesn't align with the stars. It operates on expectations of fiat liquidity, which is what it was designed to do. And so I think once the market relaxes, calms down, then we move on to this next chapter of liquidity. I mean, we're hitting the bottom of the liquidity cycle. That's what I would say here on Kitco. I'm not going to call any Bitcoin bottoms, but QT ends, it's November 18th. QT ends December 1st. The Fed has said they're going to have to start expanding the balance sheet. Just for context, peak Fed balance sheet, we're at $9 trillion. Now we're close to $6 trillion. That is an insane amount of tightening. Never have we tightened more. People often say, well, if China and Japan sold all their US treasuries, then we'd really be in trouble. China and Japan can both sell all of their treasuries at the same time, and they wouldn't have that much impact that the Fed has had over the course of this tightening cycle. And that ends in less than 2 weeks. And so tightening is over, QE is resuming, rate cuts are coming, and there's all sorts of stimulus that is coming from the Treasury Department, whether it's Fannie and Freddie Mae, deregulation, stimulus checks before midterms. And so I think we're bottoming out in the liquidity cycle. So Bitcoin is really figuring out its identity, understanding that these Treasury MNAVs might not have been the right narrative, that understanding the ETF participants. And I think liquidity will resume, will turn up, and Bitcoin will be the best expression of that. That's the prediction I'm willing to make on the show without you pinning me to a price.
All right. I like it. No prices. Okay. Well, there's obviously some tailwinds fundamentally. Obviously, you're talking about the debt in the U.S. It's continuing to grow, but we got to talk about those ETFs because you talked about it. I mean, outflows for November now total about $2.8 billion. The weighted cost basis on ETF buyers around $89,600 is kind of below, not really below market, but I mean, right there. And we've seen ETF holders kind of underwater for the first time. It made a lot of people nervous. Did ETFs make Bitcoin more fragile in moments like this?
No, I don't think so. In fact, I think the opposite. But there's two real core narratives that the market needs to digest in regards to the Bitcoin ETFs. One is this basis trade. So you're seeing large banks like Goldman Sachs or trading firms like Susquehanna, what is reported as massive Bitcoin positions. And maybe they are taking a directional position on Bitcoin, but the reality is they're running this basis trade where they're able to buy the Bitcoin spot ETF and sell the futures on the CME and capture a spread. And if that spread is returning them more than Fed funds, then that is the equivalent of better risk-free returns for these capital allocators. And so what looks like massive ETF inflows is actually also realized as sell pressure on the futures. And so there's been a misguided narrative that Goldman Sachs cares about Bitcoin just as much as I do. I don't think that's true. I think that they're trading a spread and they're making these markets more efficient. However, it is true in other circumstances, like we've seen Harvard. Harvard has one of the largest Bitcoin positions of any endowment in the world. I think it's one of their largest ETF positions within the endowment, period. Now, those positions are real. And the really important part, Jeremy, is there's been more Bitcoin OGs of folks that have been sitting on thousands of coins for over a decade that have been realizing profit. And so actually more than 50% of Bitcoin that has been acquired is underwater right now because there's been a massive rotation of a lot of folks. Almost think of it as an IPO moment where lots of early investors are realizing some liquidity and some gains. And a lot of the folks like Harvard, like firefighter pensions, they are actually using the ETF to soak up a lot of the liquidity. So I would say it's both. Part of the outflows that you're seeing is because the basis trade is no longer returning more than Fed funds. And you see this kind of cyclical wind and unwind, wind and unwind. And you can track that just by how profitable the basis trade is. But what's encouraging is all the endowments and the pensions that are buying for the long term and treating Bitcoin like a hedge against future fiat debasement.
Yeah, interesting. I mean, it's kind of dangerous, right? I mean, we've seen the movie before when too much leverage piles into a basis trade. It looks like, great, right? And until liquidity vanishes. I mean, you're not saying Bitcoin is kind of exposed to the same structural risk that broke the Treasury market back in 2019.
No, not at all. I mean, these markets are fairly standard and fairly simple, right? You're taking a neutral position on the asset and you're providing liquidity and efficiency to the marketplace. I would argue that it's not necessarily a bad thing. It's good that we have really efficient liquid markets so that, I mean, Jeremy, we saw someone sell 80,000 Bitcoin in one day and the price didn't move. And so it's really good that we have highly liquid markets. That's what you want out of a neutral reserve asset is salability, liquidity. So it's all good. It's just the market needs to digest kind of what's been liquidity dislocation. There's been a lot of campaigning and future promises on printing money, reindustrializing, ending QT, starting QE, go. And then we ran a surplus and then the government shut down. And then, well, who's actually net long these ETFs? How important is the basis trade? Well, what are these treasury companies? I see the market just gathering itself a little bit, which is obviously, if you believe in the thesis that currencies have to continue to be debased and the sponge of sorts to absorb the excess liquidity that sovereigns have to print is going to be gold and Bitcoin. This is a great opportunity to add to those positions. I think it's really that simple.
I got to ask you, I mean, when we're talking about the Bitcoin basis trade, it's kind of being artificially inflated because the futures market is over financialized relative to spot. I mean, would you support regulators tightening leverage limits for hedge funds running this type of trade?
I mean, to be honest, I'm a free market guy. It's hard for me to advocate for the perfect amount of regulation. I'm more libertarian than anything else. I'm not really into politics, and I think less regulation is better. Humans are plenty capable of governing themselves through the free market and having to realize consequences of the decisions they've made. So,
people, we're living it. We're living it live right now, Jack. But would you support? Would you kind of support a redesign of a Bitcoin ETF, for example, requiring 100% spot backing and no hypothecation?
Sure, absolutely. Yeah. And what I would support the most is a free market where all these products can compete against each other and let customers choose, what do they want? Do they want more comfort in knowing that there's no rehypothecation? Would they want cheaper pricing? And I think the market will inevitably get there, unfortunately, because of politicians and over-regulating is what we tend to do. It becomes really bureaucratic and slow. But free markets are the best way to govern a society and a marketplace, and we'll get there. And that's what I advocate for if I were in charge.
I was reading, some stories this morning, and they're talking about how option traders are loading up on the $85,000 and $80,000 strikes. I mean, how much of this move is real fear, and how much of it is option-driven structure and positioning?
I think that's what the market has to figure out. And for someone like myself, I don't really care. The really cool thing about this is if you have a low enough time preference, none of this matters. I mean, the financial system is going to collapse if they don't provide the liquidity to keep it going. And we all know that. The question is, are we going to need a bank collapse? Is someone going to have to blow up in the repo market? Is the stock market going to have to go down 20% like during Liberation? I mean, Liberation Week, where we all felt so awfully liberated, everyone thought it was a Great Depression. And then markets rallied to all-time highs only weeks afterward. And so the question is, it's a when, not an if. Now, short-term speculators, that's not me, that's not my game. What I do think is important is that markets really flush out a lot of the narratives that are maybe inconsistent with the truth. And that's what I find encouraging, is that I think Bitcoin's going to really find its identity. I was also, just because I was curious, looking up Google Trends. How popular is Bitcoin right now? And it's at its lowest level over the last 3 to 5 years. And so I think Bitcoin is going to really grow into a natural, truthful identity on the back half of what has to be an incredible amount of stimulus from sovereigns.
Yeah, well, I mean, certainly when we look at the markets today, the AI trade, I mean, there is a little bit of volatility. I mean, the greed and fear index is extreme fear right now. But I want to hit on another story because corporate treasury, obviously, these Bitcoin treasuries are under a lot of stress. Michael Saylor's 10% euro-denominated Series A preferred stock was sold at 80 cents on the euro 2 weeks ago. Today, it trades around 78. MicroStrategy just bought $835 million worth of Bitcoin in 7 days, all funded by that issue. How much stress is this putting on that treasury model, this Bitcoin treasury company model?
Yeah, I mean, I'm co-founder and CEO of 21. We expect to be approved shortly on a public stock exchange where that we can list the stock publicly. And, part of the reason and why we founded the company is we feel like we can represent Bitcoin slightly differently in the capital markets. We look at the spectrum of maybe on the far one side, there's a strategy, which is just self-described as a treasury company that does lots of financial engineering. And then on the other side of the spectrum, maybe there's a Coinbase, which builds, cash flow for profit products that then they use to give investors exposure to Bitcoin. We think we can live somewhere in the middle where we are not as sold on these preferred equities. We don't totally understand why, if we are a company and we buy Bitcoin, that Bitcoin would be worth twice as much on our balance sheet as if it was on an individual's checking, Fidelity account. And so we're kind of living this middle ground where we're going to build financial products and turn profit and have loads of cash flow whilst also optimizing to be capitalized on Bitcoin as a treasury business. So my opinion on the preferreds, I think that they add a lot of leverage and a lot of pressure to the MNAV itself, because if you are signing yourself up for financial obligations in the future, like you owe anyone in the world 10.5% forever on any amount of money that they want. Well, the only two ways you can finance that if you don't have cash flow is either through selling your equity or the Bitcoin that you have on the balance sheet. And so for us, it's always been dubious. How do you not put an immense amount of pressure on the MNAV? Because you're effectively adding leverage to the MNAV. You're saying that the MNAV is implied to have a substantial premium, which makes that dilution worth it. But if that's not the case, then you have to start selling your Bitcoin. And so our opinion has always been that's not where we want to live. Right. We don't consider ourselves a treasury company for that reason. We want to be a combination of, the best parts of Coinbase and the best parts of MicroStrategy. And I think the market is flushing out and figuring out, well, what exactly are these things and how do we price these securities? Because clearly the market doesn't agree with the fact that there's a deserving MNAV and that, that leverage on top of the MNAV needs to be realized as true. And that MNAV has fallen to 1 or sometimes below 1. And so the question is, if you have all sorts of really expensive financial obligations in the future, how are you going to finance that? And so we want to be the Bitcoin company in the capital markets that can explore leverage, can explore a treasury business, but afford it with cash flow as opposed to things like dilution or having to sell Bitcoin off our balance sheet. But we'll see. Obviously, Michael has been a pioneer in the space, and maybe he can figure some things out. He's a self-described financial engineer. But to date, I think that's what the market's figuring out. And yeah, there's a lot of pressure on these MNAVs because there's future financial liabilities that rely on them to get paid.
Yeah. So to be clear, Jack, you're saying Strategy's model depends on perpetual leverage, while 21's model depends on perpetual accumulation, because those are two very different philosophies.
Yeah, I think, this could sound extreme or sound like a dig, but, it's not. We want to be the treasury company that can afford it. Right. If you look at Tether and myself and our leadership team, so I co-founded the business with Tether. Our largest outside investor is SoftBank. We have what it takes to build massive cash generating businesses within the industry. Strike is one of the most profitable per employee Bitcoin companies in the world. Tether is probably the most profitable per employee company, period, in the history of mankind. So we have lots of ideas and lots of future plans to build cash flow within the market that gives investors an ability to participate in Bitcoin's story through an operating business. And then conversely, we're already the third largest corporate holder of Bitcoin. We will be able to add to that position substantially once we're approved. And we want to be the largest holder of Bitcoin. And we think, we can take the best of what Strategy is, which is a large Bitcoin holder and ability to accumulate, whether it's through monetizing volatility, cheap costs of capital, access to the capital markets, and the best of someone like Coinbase, which is a first mover and a leader within the industries they focus, which Tether and I have been in our careers. So that's us. We do not necessarily want to add leverage to something like our MNAV. We do not want to add leverage to our common equity necessarily. That puts a lot of pressure on future dilution and shareholders to have to finance. We don't want new investors being responsible to finance, existing preferred owners necessarily, unless, we're missing something. And if we are, we're going to copy Michael Saylor. But so far, we're watching closely and have more of a directional focus on maybe optimizing for cash flows that would finance something like convertible bonds that we would raise in the future.
That's interesting. Yeah. No, the differentiator is there. I was talking to somebody this past weekend and they said, are these corporate treasury companies just turning into leveraged Bitcoin ETFs?
Yeah, but the interesting thing about that question is there are leveraged Bitcoin ETFs. If you want to leverage a Bitcoin ETF, you can do that on your own. And so the question is, at 21, what can we provide the market that others can't? And I think the very obvious answer is not everyone is Tether. Not everyone has been in Bitcoin 13 years. Not everyone has founded Strike, and not everyone is SoftBank. And so we plan to provide, our goal has always been be the best way to participate in Bitcoin's story in the capital markets. We think we can bring both blue chip credibility and startup upside to the capital markets. And we feel as if that was missing. Coinbase, we don't think is a Bitcoin company. We think they're a crypto company. And Strategy does not have Bitcoin native cash flow, does not build Bitcoin products, and is relying on, as far as I can tell, and again, I know I'm going to get all sorts of stuff from Strategy shareholders, and it's not my intention, but I'm just trying to build a delineation of there's, being levered with expectations of financing it through common equity or through Bitcoin sales versus being able to build a business alongside it that can optimize in being levered and being more aggressive in Bitcoin exposure. That's where we want to live.
Yeah. Yeah. I mean, so would 21 Capital ever issue debt or preferred stock the way Strategy kind of just did, or are you trying to build the first sustainable Bitcoin treasury model, not that leveraged one?
Yeah, so we've already raised a convertible bond instrument, and so that's certainly within the reins. And I would say, we have a culture never say never, right? Again, part of our culture, not only at 21 and Strike, but also in Bitcoin, is stay humble and stack sats, as they say. Is within Bitcoin, you're not the main character, you're not the all knower of the universe. Learn, listen, and so we're watching the industry. But I would say, as of right now, these preferred equities, owing 12% forever, that's a really expensive bill to pay, especially if I have to pay it through dilution or through my Bitcoin holdings. And obviously the math works out if Bitcoin's compounding at a higher number, but we're sitting patient. Launching a preferred equity will not be our first product once we're approved. I can say that confidently.
All right. You touched base on one of your partners, or Tether, and I just want to bring in something that's developing quickly because it touches your world directly. I mean, Tether, obviously, which was publicly listed as one of the strategic backers of 21 Capital, has spent the last 6 months making a surprise push into the gold royalty sector. I mean, they took a stake in Elemental Altus back in June. I think they helped EMX royalty merger in September. October, they went into gold royalty and Metella. Some analysts are calling it a hard money land grab. Others say Tether is trying to control the business of gold, not just hold it. What do you make of this? I mean, why is the world's largest stablecoin operator suddenly consolidating the precious metals royalty space?
Yeah, so I first just want to give a disclaimer.
Yeah.
Tether are some of my oldest friends in the space. I obviously spend a ton of time with them. I was just with them in Miami and before that in Switzerland. And so they're my friends, but I'm not employed by Tether and I don't speak for Tether. So I will speak as, an independent buddy that has his own opinions, but I need to disclaim I'm not representing them, to be clear. I can't have, a news headline like Jack says Tether's going to do this. But my opinion is, they have this tagline, which I think says a lot about who they believe themselves to be, which is Tether, the stable company, not just the stable coin. Mm-hmm. And the way that I would, my opinion on Tether is that on one side of the world, you have AI and folks like Sam Altman that is effectively saying, we're going to be so good at AI that we're going to solve all the world's problems. We're going to grow our way out of the debt. We're going to solve intelligence for everybody. We're going to live in a world where nobody even needs to think about money. And I think that sounds like a lot of hyperbole. And if Sam is able to achieve that, God bless him. That's unbelievable. But what if he doesn't? What if we are living through a sovereign debt crisis? What if we are entering a multipolar world? What if neutral reserve assets are going to be repriced? What if the world is looking for a more reliable bank? Not the Federal Reserve, not the European Central Bank, not the PBOC. And I think Tether's building for that world, which is just a more practical, reasonable, logical world, which is, okay, we're going to capitalize our business on neutral reserve assets. We're going to be better at EBITDA and profits and employment and efficiency. We're going to focus on technology. And so that's kind of the way I see, both these companies are private, OpenAI and Tether. And they're both worth $500 billion, supposedly. Mm-hmm. One, though, is massively unprofitable and is aiming to pull off something that's perceived to be physically impossible, which is solve all the world's problems in a record amount of time. And the other is massively profitable and operating fairly logically. So I think their entrance into gold, listen, Jeremy, I would say, is it impossible that the Tether dollar is valued more than a US dollar in a future state if the US dollar goes through a serious currency crisis, because Tether has one of the largest holdings of gold and one of the largest holdings of Bitcoin in the world? If you are someone in Nigeria, who would you rather trust? Yeah. I think they're building, a Fort Knox like a modern day Fort Knox, a stable company that if the world isn't going to be magically solved by a bunch of AI wizards in San Francisco, that they can provide stability and banking to the world and technology to navigate our way into this new era.
Yeah, that's interesting. That's an interesting take. Because if the world is looking for something better and Tether is positioning itself as a reliable backbone, that also concentrates an enormous amount of power and risk into one private entity. Does that worry you at all? I mean, that we might just be swapping one form of centralized fragility for another, only this time under the banner of crypto or stablecoins?
No, because I guess what other way would you want to have it? Ultimately, Tether is governed by Bitcoin and gold, right? Like Tether can't print a bunch of Bitcoin, Tether can't print a bunch of gold. And so ultimately, I think where humans belong is being governed by Mother Nature and the natural laws of the universe. But if we're going to go a level down, Tether won the free market. There's been plenty of stable coins. There's been plenty, and trust me, as their friends, I know, they have been harassed, ridiculed, lied about constantly. But customers elected their approach, their product, their leadership team, their brand. And so they've won the free market. So I guess my rebuttal to that would be a question of, well, what else? What do you guys want? Would you guys rather have a government and a nation state? Would you rather have a big tech company? This is a business that has been built on product market fit, cash flows, and a vision. So I don't know. If not for a private business, who would I rather have? I'd certainly rather have a private business. They seem way more efficient than a government. But within the private sector, do we need to elect, do they have to be public? Do they have to be from America? I don't believe so. I fundamentally believe in free markets, and they've won a grueling free market. So I think they deserve it. And if people don't want to use their product, they shouldn't. No one's ever put a gun to anyone's head and said you have to use USDT. So I don't know. That's my opinion. But
yeah, it makes sense. I mean, listen, and again, I'm not going to put a headline on this piece saying, Jack Mallers said, but you're close to this. These are your buddies. I mean, internally, do you see Tether's long-term vision as, A, making the dollar more usable? Is it B, making Bitcoin more usable? Or is it C, kind of quietly building the rails for a post-dollar system altogether? Because if Tether succeeds at becoming the reliable layer the world trusts, what does that make Bitcoin in that architecture? I mean, is it the engine? Is it the collateral? Or is it just another asset riding on the top?
Yeah, I mean, I think that the world needs to recollateralize entirely, right? Like right now, we're collateralized against sovereign debt, and we're in a sovereign debt crisis. And so, depending on where you are in the world and who you are, you're recollateralizing on gold or you're recollateralizing on Bitcoin. And so I think Tether is doing exactly that. They have these three products, right? They have tons of Bitcoin products, and they are a Bitcoin leader. They also now have gold products. So Tether Gold is really interesting to me because they've used their stablecoin technology to tokenize gold, and it's seeing meaningful adoption. And I think that product can be used to settle commodity trade between sovereigns. I think that product could be used for people that are sick of the dollar being debased. And then they have USDT, which is the savings account for 500 million people in emerging markets. And so I think each of these products serve very different customer cohorts. Like Tether Gold and their gold positioning, I think is serving maybe a lot of the eastern side of the world, the people that are remonetizing gold and there's a lot of commodity settlement now in gold. If you wanted to tokenize gold and digitize gold and do digital payments with gold and settle commodity trade, I think Tether's going after that market potentially. You have the Bitcoin market, which is dominated historically by the West. These are net producers to society. There's a massive wealth transfer going on. It's where the wealth exists, primarily in the United States of America. And it's certainly transferring into Bitcoin, which is now a $2 trillion asset. And that's, Tether and I's entrance into the capital markets. I think focusing on Bitcoin, serving Bitcoin, being able to build Bitcoin cash flow, a large treasury. And then the last is USDT, is there's half the world that is living through extreme hyperinflation, living within some authoritarian regime where money is used to abuse them. And that product is extremely popular because if it's a question between the Turkish lira, the Nigerian naira, and the dollar wins every day of the week. And so in 20, 30, 40 years, I personally believe Bitcoin wins out. And I know Paulo, the CEO of Tether, has been very public in saying that as well. But, as CEOs, we have to build for today and for what customers want now. It's, if there's an island out 50 years from now where Bitcoin solves everyone's problems, But we're on an island right now where people have loads of problems. And if you just focus on the 50-year island, then you leave them stranded and you don't connect and build a bridge. And so a lot of the tools that we're building is bridging people to a better future. And, even at 21, we're building a bridge that's walking people from a distressed world to a more prosperous world. And we're building the bridge, standing right in the middle of the bridge. And we're saying, this thing's not going to break. It's stable. You can walk on it. Bitcoin works. So anyways, I think, we share in that vision and that mission together.
Yeah, okay. I mean, I could continue to ask you on the Tether stuff, but I'll get Paolo on the show and leave you alone on this.
He's you just brought up, you'll like him.
He's good. You just brought up, obviously, your company here talking about launching with over 42,000 Bitcoin, right? I mean, 21 Capital, what are you around, 43,500 plus right now?
Yeah, 43,514 and some change.
So, I mean, the straight question our audience cares about, I mean, are you buying this dip and at what scale?
Well, we would like to be approved to engage in some financing. So right now, we've submitted our final updates to our S4. We have a shareholder vote that's scheduled for December 3rd. And so we, fingers crossed, get approved and able to list the stock on a stock exchange publicly. And then, then we're in the game. Put me in, coach. I'm ready to play. But for right now, we're pencils down and working with the SEC on the approval of the transaction.
And on the psychology of this market, I mean, you've probably been blown up. Everyone's questioning what's going on. Do you feel a responsibility to act during these market stress periods, or do you kind of follow a fixed strategy?
No, I think it gets really complicated the more variables you include in the pot. I like to keep things simple. The liquidity situation within the United States has been convoluted. Risk assets are going to respond to that. Bitcoin's going to respond the most because that's what it's designed to do. Liquidity is going to come back. It has to, or else the world's going to fall apart. Bitcoin wins in that version of reality as well. It just involves a lot more pain. But no, the United States is defaulting silently via inflation. And Bitcoin will be the best expression of that as well to the upside. And so, that's why I think cash flow generating businesses are so important, is focus on building value for those around you, earn more than you consume from the world, and continue to buy as we can, and stay humble and stack sats. It's really simple. I think a lot of the pessimism and just the capitulation when it comes to the energy of the industry is because there's been such a stark rotation. So many early Bitcoin holders have realized some profits, and that implies a lot of newer entrants at prices that are higher than we are now. If over half of Bitcoin holders are underwater, it's going to feel a lot worse than it is. Year over year, Bitcoin's still up by a couple percentage points. If anything, we're flat. This is not a catastrophe. Sam Bankman-Fried didn't rob $10 billion from all of us. We're okay. I think the liquidity cycle is bottoming out. And this is a great time to add. An emotional trader is the worst trader. Leave emotions to the bedroom and just focus on staying humble and hard work and conviction in moments like this.
Yeah, I mean, on-chain data shows that whales are accumulating about 36,000 Bitcoin during the sell-off. El Salvador just added another $100 million. We talked a little bit about Saylor there. I'm just curious, because is this the first cycle where institutions kind of bought the top and the retail avoided the bottom?
I think that's one of the coolest parts of Bitcoin's story generally, is that institutions are forever buying the top because all of the individuals did buy what you're calling the bottom. We were the first entrants into the market. I think that's one of Satoshi's greater innovations and achievements as the founder of this thing. If you think about it, if Satoshi would have said, hey, I found a way to solve a previously impossible computer science program or a problem, and I need to distribute this thing to the world. And he went to Goldman Sachs and IPO'd Bitcoin. Well, Goldman Sachs would have took 25% of the supply, and then a bunch of investment banks would have taken the rest, and the people would have been shafted. And that's kind of the classic story. But instead, he used proof of work, he used energy, he used mining to distribute it to the people. He leaked it on a mailing list and said, hey, anyone in the world, use energy and go have it, get after it, use this thing. And so it's for that reason that institutions and governments combined, they don't even own 10% of the supply of this thing. The people, the individuals own this. And so institutions are forever buying the top of Bitcoin. And that's the coolest part.
Mm-hmm. Yeah, well said. And you know what else they're buying? The top of gold. And this is Kitco. And I just got to ask you, we'll leave it on this because our time always goes fast, Jack. I mean, have you had any direct conversations this quarter with sovereign wealth funds or government treasuries about Bitcoin accumulation?
Yes, definitely. The interesting thing, gold has added many Bitcoins worth of market cap to its market cap just this year.
Yeah.
And the reason I give that context is gold is a far more mature asset, and it's usually referenced as such in how long it's been around as a money or as a store of value, but also in the size of it. If you think of gold's skeletal frame, it has the weight and the breadth to take on a, $1 trillion allocation over the course of a year. Like China's trade surplus was almost $1 trillion in the calendar year of 2024. Gold has the skeletal frame to take on those inflows where Bitcoin is just too small. So really the adoption curve of Bitcoin is how does it evolve and grow into the skeletal frame that can take on something like China's trade surplus? Because at $2 trillion, China's trade surplus last year was 50% of Bitcoin's entire market cap. Mm-hmm. And so right now, I think sovereigns and endowments and pensions and public companies are really feeling out what's the right way to allocate to this asset, because there's no question it's been the best performing. There's no question it has better properties, like it's scarcer, it's easier to move, it's easier to store. But the question is, how does it become a $30 trillion asset? And those are the conversations that are had. Right allocation, right way to think about it. And I think you're starting to realize that. I mean, seeing Harvard build the position it has is pretty validating.
Yeah. And how do you use it, right? I mean, if Bitcoin is going to become the global money, what's the next one thing that has to change next cycle?
Well, Strike, we launched Bitcoin-backed lending earlier this year, and we've become one of the largest Bitcoin-backed lenders for retail in the world. And I give you that context because it's the biggest utility use case of Bitcoin I've ever launched in my life. And I was an early pioneer for Lightning. I was very involved in El Salvador's story. But allowing people to borrow and earn liquidity against their Bitcoin without selling it and without incurring a taxable event has been a massive opportunity for the market. And we estimate the size of this market is only about $25 billion in size against a $2 trillion asset. And so we think that there's a huge opportunity to actually build credit markets on top of Bitcoin, which do allow. So for example, some of our customers, they're borrowing against their Bitcoin and they're putting a down payment on a house. They're borrowing against their Bitcoin, they're putting their kid through school. They're borrowing against their Bitcoin, they're financing an emergency medical surgery. And the interest that you're accruing on the Bitcoin is far less than the accumulation and the performance that Bitcoin has against debasing currencies. And so you also avoid the taxable event. And so we're seeing Bitcoin actually impact everyday lives as a money, not by necessarily spending it, incurring taxable event, and Gresham's law, you're not incentivized to spend it, but borrow against it and building technology that makes it transparent, reliable, efficient, cheap. And so I actually am a big believer that that's the next step, is that if everyone can accumulate Bitcoin and then just get liquidity, whether it's lines of credit, whether it's termed loans against it, so that they can hoard it and benefit from what is now called the debasement trade, while still being able to benefit their life so it doesn't just sit under their mattress.
Yeah, well said. Oh, that's a whole other show that we're going to have you back on for. Jack Mallers is, of course, CEO of Strike and co-founder of 21 Capital. Thank you for being here on a critical day for the market. Congratulations. I hope all goes well. Excited to hear more
you guys
about
are the
21
best.
Capital.
Yeah, thanks for having me back, man. You guys are great.
All right, short-term volatility comes and goes, but the long-term holders and long-term planners tend to navigate it best. That's true across every cycle. Now, big thanks to our sponsor, Swan Bitcoin, your partner for generational wealth. You can get started at swan.com/Kitco. Now, I'm Jeremy Szafron. For all of us here, thanks for watching. Be sure to hit subscribe. We'll see you next time.
Swan is the premier Bitcoin wealth platform serving leaders of families and businesses. Swan's mission-driven team simplifies Bitcoin investment, custody, and security, bringing you concierge service, world-class research, and exclusive events.